This is not financial advice. I'm recording my thoughts about Atlassian stock, ticker symbol TEAM. In the past, I've made a video about Atlassian when it was trading at about $230. And I said in that video that it's one of the worst investments to make. But today it's trading at about $168, so I want to reevaluate. In this video, I'm only going to cover the financials and valuation 5 years out. But if you want to know about their business model and some of the challenges that they're facing with respect to margin compression, you can check my previous video. I will leave that link in the pinned comment. Let's look at its financials. At $168 stock price, its market cap is about $43 billion. When you look into the revenue for the past 12 months, they made about $3.36 billion. That's a price to sales of about 13, which is expensive. In general, we look for a price to sales of 10 for companies like Atlassian. In the most recent quarter, they made about $915 million of revenue, and the gross profit was about $746 million. So that's about 82% gross margin, which is very impressive. Even though they made about $746 million of gross profit, their operating expenses were about $908 million. So when you deduct $746 million from $908 million, you get a $209 million of net loss. With respect to the number of outstanding shares, they have about 256 million outstanding shares currently, but almost 12 months ago, they had about 255 million. So that's not significant dilution. So this is good for the investors. So they made about $200 million of net loss, right? So who is going to pay for it? If they lose $200 million per quarter, that's almost $800 million of loss per year. This loss has to be covered by the cash and cash equivalents that they have on their balance sheet. As you can see on the screen, they have about $2 billion of cash and cash equivalents on their balance sheet. They have about 2 years of runway with the current cash. Let's quickly look at stock-based compensation. They offered about $263 million of stock-based compensation in 1 quarter. So that's more than $1 billion of stock-based compensation in a year. But the good news is they're not significantly diluting the shareholders, so they're buying back the stock-based compensation. So even though they're giving a lot of stock-based compensation, at the moment it's not a big concern. The revenue in the most recent quarter, as I said, was about $915 million, and that represents about 24% growth year over year. And let's look at its outlook for next quarter. They're saying they can make about $900 to $920 million of revenue, and this also represents about 25% year-on-year growth from the past year. Let's now look at Atlassian's valuation. As usual, I'm going to provide 2 cases, one with reasonable assumptions and the other with great execution. In the reasonable assumptions case, they made about $3.18 billion of revenue in 2022. In the most recent quarter, they grew their revenue by about 25%, and in the next quarter, they're saying they can grow about 25%, right? But as they grow bigger and bigger, it's hard to grow. So I'm estimating a growth rate of 20% for this company, with which they will make about $8 billion of revenue in 2027. This company has gross margins in the order of 82%, so net profit margin of 30% is possible. If you watched my previous video, I only considered 25% because the management was saying that they cannot hold that 82% gross margin and they may get to 75% gross margin due to the challenges, for example, like cloud migration. But in this video, I'm still going to consider 30% net profit margin. With that, they can make about $2.4 billion of net income in 2027. For a company that's growing in the 20% range and has a 30% net profit margin, I can happily pay a multiple of 25. But since Atlassian has a moat, I'm going to give it a premium multiple of 27.5. So with that, the market cap in 2027 would be about $65 billion. With respect to outstanding shares, they currently have about 256 million. And even though they're offering almost $1 billion of stock-based compensation, they are not diluting the shareholders significantly. So I'm assuming no dilution. If they dilute the shareholders, they don't have a reason to dilute the shareholders because they have close to $2 billion of cash in their balance sheet. But if they do dilution, I will make another video to do a revised valuation. But at the moment, I'm assuming no dilution. Now, when I divide the $65 billion of market cap with 256 million outstanding shares, I get a stock price of about $255 in 2027. Currently, they are at about $169, right? That represents about 51% gain in the reasonable assumptions case, which is decent. It's going to beat the index. Let's now look at the great execution case. I'm assuming 25% estimated revenue growth in this case, which is difficult to do so, but they can do it with great execution. I'm assuming the same net profit margin of 30%, but I'm giving it a multiple of 30 because they're growing faster in this case. With that, they will have about $87 billion of market cap in 2027. With respect to number of outstanding shares, I'm assuming that there's no dilution. Divide the $84 billion of market cap with 256 million outstanding shares, I get a stock price of about $341 in 2027. Currently, they're at $169, so that's about 102% gain, which is an attractive gain. You'd get to 2x your money. In conclusion, I'm looking at a 51% gain in the case with reasonable assumptions and 102% gain in the case with great execution. So if someone wants to buy the stock at $169, I don't think it's a bad bet, but personally, I'm not buying. I have enough tech exposure. I do not want to have more unless I see a very good deal. I'm looking for other opportunities, for example, in e-commerce or retail. So for that reason, I'm not going to buy Atlassian stock at $169 stock price. Let me know your thoughts in the comments. Thank you so much for watching.